Hello traders, my name is Gregor Horvat and welcome to a new video analysis in which I will cover the euro dollar, dollar Swiss, also dollar index, gold and crude oil. Now on the euro dollar weekly chart, as you know, we are tracking this running triangle and wave B, which is maybe already finished here with this wave E final leg of the pattern, or maybe the wave E will be more complex. Okay, so on the daily chart we are tracking two wave counts for wave E. First suggests that we have seen a three wave rally with A, wave B and wave C up, and that now we will see a 5 wave decline here from these latest highs, or that wave E will be even more complex, labeled as a double zigzag. Here was a first zigzag and second zigzag, and here is wave X, which connects the first to the second zigzag. Okay, but even this wave count suggests that we will see firstly lower levels before we go to the upside. So we expect a third leg of decline, because as you know, even if the pullback is corrective, we still need 3 waves of decline. So I think this is wave A, wave B and wave C base, and wave C will occur based on this wave count. On this wave count, which is my primary one, suggests that this retracement to the upside was wave 2, and that we will see a significant sell-off into wave 3 of a 5 wave decline. However, on both wave counts, the important is what is actually happening now, which means that we need to focus on one wave at a time. So I will be looking for a third leg down, no matter if it's wave 3 or wave C. Okay, we will adjust the wave counts later. And the reason why we are bearish is of course this decline on the 4-hour chart, which can clearly be counted in 5 waves. We know that impulsive 5 wave patterns are showing direction of a trend. This was a very sharp and significant decline, and this pullback, as you can see, was very slow, very choppy, very overlapping, cannot be counted impulsively. So I think it's a corrective movement, okay, part of an incomplete downtrend. Notice that we have also retraced back to the wave 4 of back to the termination point of this wave 4, also hit and touch this 50% retracement area, and now we are reversing to the downside. We can see that price is already beneath this rising trend line, so ideally this rally in wave 2B is complete. However, as we know, I always pay a very close attention to a daily close price, last price of the day, which is the most important price. Okay, now we still have the FOMC ahead of us, so there can be plenty of ups and downs on the euro dollar on the intraday basis. So I definitely do want to see a daily close price, maybe around current levels or lower, to make sure that this wave 2B has accomplished the pullback right here. Okay, now here is also interesting chart from this very simple old school approach. You can see here that market was rising, okay, and then we had this trend line breakout right there, and then a pullback back to this trend line, which turned into resistance. So here this trend line represented a support, but here it represents a resistance. So you can see that prices reversed perfectly from it. So ideally we will see now deeper levels. Also I have here this technical chart. You can see that prices moved to the downside significantly at the start of November through this 50 period moving average, which is now trying to react as a resistance. Here we have already seen a reversal to the downside. Prices also reverse from this 20 period moving average, which is actual midline of these Bollinger Bands. So ideally we will see a continuation to the downside. We have all indicators and wave counts, trend lines, guide lines that suggest lower euro dollar. Okay, so we will see what will happen next. Now on dollar Swiss, obviously we are tracking something similar. Firstly, let's take a look on the weekly chart. We can see 5 waves to the upside and a 3-wave retracement. This is a contra trend movement. Wave C, as you can see, tested this lower trend line, parallel trend line of this corrective channel, and prices reversed higher from it. On a daily chart, you can see here that reaction to the upside was quite strong through the former swing high. This is very important signature for a trend, for a change in trend, and I labeled this recent decline as an ending diagonal placed in wave C. Okay, so if that's the case, then you know that market will move significantly to the upside. Now I also have this alternate count, which suggests that wave B will get more complex, but also this wave B, which is part of incomplete decline, still has room for more upside because it needs to be made by 3 legs at least. Okay, so this could be wave A, wave B, and wave C to the upside. So actually, of course, it's very similar situation like on the euro dollar. Now on dollar index weekly chart, we identified end of a wave C here, of which is part of incomplete wave B triangle. So price action, as you can see here, is clearly sideways, and here on the daily chart we have spotted this breakout through this falling trend line, which is the reason why we called a change in trend on this dollar index, and labeled a double zigzag here in wave C, and now we are focusing for higher levels up in wave D. So of course I'm looking higher here as well, while I'm looking down on euro dollar and higher on dollar Swiss. Here's also the 4-hour chart. You can see that 5-wave rally, 3-wave retracement back to the area of previous 4th wave. Now we are already reversing slightly to the upside, so ideally we will see a continuation towards the new swing higher, okay, which means above this level. And now let's take a look also we set on crude oil. Now on crude oil weekly chart is now, I was tracking 2 wave counts lately. The first one, and actually the primary count, was that this was a completed wave B triangle here, and that this was a 5-wave rally and wave 2 pullback, and that we will see continuation to the upside. However, I really do not like a slope of this wave 2. As you can see, the price action and this fall is very sharp, and actually it doesn't fit very good into this current labeling for wave 2. As you know, wave 2 is a corrective leg, so you would expect something more complex, okay, or maybe something more simple in 3 waves, okay, something like this. But obviously, as you can see here, this is actually just one leg to the downside, so it definitely doesn't look like a simple 3-wave decline or any complex decline. Okay, so I think that it's time to focus on the other wave count, which was also posted on the site. It's this wave count, which suggests that this was wave A, this was a 3-wave rally for wave B. Notice that this wave C has spiked and topped out between these 2 swing highs, okay, and now we are reversing significantly to the downside. So this price action, actually current price action, suggests that this wave count is more appropriate, okay. So I'm tracking on the 4-hour this new updated count, okay. Actually, firstly let's take a look on this daily chart, okay. Now this daily chart suggests that we are moving lower in wave 3 of C. Now wave 3 should be subdivided by 5 waves. I can see here wave 1, wave 2, wave 3, and wave 4 probably underway. So I'll be looking for more weakness here towards 261.8% extension of this wave 1 distance measured from a wave 2 swing high. So I'm looking for lower levels here, and on the 4-hour chart I can see some very slow, very choppy price action over the past few days, which I think it represents a corrective movement. So I think it's wave 4 in progress. I labeled here end of a wave 3 counted from here, okay. This was a 3rd wave of decline, so obviously market is now moving into the opposite direction. We are tracking a 3-wave rally for wave 4. Now wave 4 will ideally retrace back to the area of a previous 4th wave, which is here, and also we may see test of these levels, this swing low. You can see here also we have a 38.2% retracement, which is very typical Fibonacci retracement level for fourth waves compared to wave 3. I would really pay a very close attention if the market will reach these levels, because I think we could see a reversal, nice reversal to the downside into wave 5. Now I can also take a distance for wave 2. Let's take a look. Now not usually, but sometimes wave 2 and wave 4 are very similar. Just a second. Okay, are very similar in distance. So here is the distance for wave 2, and I will now copy this and we will compare it from this low, and you can see that we also get a projected level around $96 per barrel. So this is another reason from a technical perspective why this region could be very important for the next move to the downside, for the next sell-off on crude oil. Okay, and now let's take a look also on gold. On gold we are bearish. Okay, we are tracking an incomplete 5-wave decline on this wave C. The reason why we are still bearish on gold is very simple. This was a 3-wave rally, okay, followed by a reversal in trend through this channel line. So ideally market is in a new 5-wave of decline, labeled as a red wave 5, and this was wave 1. As you know, we were tracking then this expanded, sorry, it's not an expanded flat in wave 2, but it's a running flat, because wave C, as you can see, did not breach or did not move beyond this wave A swing high. So this is a running flat, but more importantly is finished because of this recent fall, which unfolded in 5 waves. And you can see here the recent updated chart. I labeled this as a 5-wave decline in wave 1, wave 2 pullback, 5-wave decline for wave 3, wave 4 pullback, very sharp, and now it seems to be wave 5 unfolding, which could test or maybe spike beneath this low to complete wave 1, and then I would be looking for a 3-wave retracement in wave 2 back towards this wave 4 resistance zone. Okay, so I'm bearish on gold, but still I suspect that we will see some more complex and larger corrective bounce before this market will continue sharply to the downside. Now on the daily chart on the daily line chart, actually, where I have this, okay, here this, you can see that price is now at this lower side of this head and shoulders pattern. It's testing the neckline. So I suspect that we will see something more complex here, consolidation, and I believe that this will be wave 2 as shown here on the 4-hour chart, before this market will continue to the downside. Okay, but from this perspective, head and shoulders view, I see bearish developments here and suspect that this gold will continue to the downside through those lows back from June 2013. Okay, traders, that's it for now, and I will catch you later with some updates after the FOMC. Have a good day.